Hi, I'm Kara Murphy, and this is Money with Murphy. 2023 was full of surprises for investors. Some of the most heard predictions for the year actually never materialized at all. A recession in the US and other developed markets, the death of fixed income as a valid asset class, sticky inflation, and even a rebound in China. Instead, investors enjoyed some positive surprises. Stocks rose handily. The S&P 500 increased by an eye-popping 25% on the year, led by technology, communication services, and consumer discretionary stocks. Bonds also rose. The Bloomberg U.S. Aggregate Index capped off the year with a solid 6% return. Commodities were one of the only blemishes across asset class returns, declining for the year by almost 8%. So, after last year's pretty exceptional performance, what can we expect for 2024? Let's start with interest rates. Although inflation remained above the Federal Reserve's 2% target during 2023, inflation measures declined persistently, heralding a likely end to the Fed's rate hiking cycle. Markets quickly shifted focus to rate cuts in 2024, pricing in a hefty 5 rate cuts, which would bring the Fed funds rate back to its level of November 2022. All this excitement aside, the Fed will need to tread lightly and not cut too aggressively for fear of reigniting inflation. Moving on to equities, the strong returns from last year may actually bode well for this year. Since 1950, the S&P 500 has returned greater than 20% 19 times, excluding 2023. When this has happened, the average return for the following year averaged a solid 10%. In fact, returns have been positive the following year 15 times. So history suggests equities could see more green in 2024. All of this said, there are some risks to the market. Some technical indicators have become less constructive, and valuations have increased above long-term averages. These factors and others may make it difficult for the market to repeat the impressive returns of last year. What we could see is a change in leadership. In 2023, stock index returns were propelled by a very small group of names, often referred to as the Magnificent Seven. These 7 stocks gained over 100% for the year and provided much of the return for the S&P 500 index. In fact, the S&P 500 less those 7 names returned just 15% in 2023. While those 7 names are unlikely to repeat that performance this year, it does mean that there are many other stocks that may have their opportunity to shine. For example, small cap stocks, as measured by the Russell 2000, underperformed the large cap S&P 500 by nearly 10%. Despite that massive underperformance, small caps still trade at a steep valuation discount relative to their large cap counterparts. History shows that periods of small cap underperformance of this magnitude were typically followed by periods of outperformance. Now, timing of that outperformance is difficult to call, but stay tuned for more insights for 2024 over the next few weeks. And until next time, invest wisely, live richly, and Happy New Year.